The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Well, here we are. We got to discuss the markets, of course, because yes, as we were just saying, it's kind of up a little bit, but it's still nowhere near where it was before. So joining us now is Martin Leinweber. He's digital asset product strategist at MV Index Solutions. Good morning, Martin.
Thank you very much for having me.
Thank you for coming back. So we have, it seems like we're on the cusp of a recession. You know, we do want to get to the sort of the market dynamics of the day, but kind of on the bigger picture, we're on the cusp of a recession. And it seems like basically crypto is, of course, become more of a risk-on asset. So is this ultimately, as the recession, if a recession were to come into place, as was indicated the potential, at least by Chairman Powell, is that something that we should really worry about in the crypto markets?
Well, I think that's a good question. And in our last interviews, I've mentioned how important the macro backdrop is. And while that is still important, we see more and more idiosyncratic risks popping up. So following the there has been liquidity scarce at 6 centralized companies. The latest two joining the club are Maple Finance and Babel Finance. And furthermore, we have the insolvency of one of the largest VC funds, bearish. But these happen during the maximum pain phase of a bear market. And now here's the interesting thing. So normally you would think that the blue chips, Bitcoin and Ethereum would outperform the altcoins in such a phase. But they didn't. So the old narrative that the Bitcoin dominance will rise in a bear market didn't materialize. So that's a sign for me that people sold what they can and not what they want. So you're right. The Fed and pricing in a recession is an important thing. But I think at the moment, we are more dominated by those idiosyncratic risks. Yeah.
I think we do have a chart that you provided showing kind of the past few days of the returns on some DeFi and Bitcoin. Hopefully we can call that up in a second. But one question I would have in looking at that is that also potentially even a dead cat bounce? In other words, was it potentially that all those other assets were oversold relative to Bitcoin and ETH, and just kind of are coming back now to sort of where they should have been before relative to Bitcoin and ETH?
Well, I think, without knowing if we just hit another local bottom, I think you're referring to that. I think there are a number of major bottom signals. Yeah, for example, sentiment readings are super bearish. Interestingly, the Bitcoin dead searches on Google also touched an all-time high over the last weekends. So the negative sentiment is also reflected in the stock market, which is as bad as I've ever seen. But here's a quick reminder. The best trades come when others are forced to exit and are at their lowest points. So the last time we had the new Bitcoin futures ETF, for example, marked the peak of the cycle. This week we have the launch of the first short Bitcoin ETF, betting on falling prices. So looking into the past, it's remarkable to see how the market did a complete U-turn on these significant launches. Is this another bottom signal? Time will tell. So the big question is, how could crypto bottom while the Fed is hiking and there is a recession ahead? And there's a simple answer, mean reversion. So for example, crypto decorrelated, driven by the Terra Luna collapse, and has since dropped 40% more than the Nasdaq. And I would watch the correlations of crypto to Nasdaq, which has fallen as well, at least short-term correlations. And remember when I've told you that I'm just watching the dollar and rates, I think a big thing now is that oil is falling, indicating that we are pricing in a recession. And while this could dampen the overall price performance, that's the last shoe to drop, in my opinion. And so oil is very important for headline inflation numbers. We see copper falling as well, and this will bring inflation down. So we need that in order for the Fed to pivot. And that's critical for the crypto market to sustainably rise again, the Fed pivot.
So I see, Lawrence called for that chart on investment category performance with year-to-date performance of crypto sectors versus Bitcoin and Ethereum. So I wonder if you could tell us, what are you seeing here as to the economy's impact to the crypto sector?
Yeah, so that's the performance over the last 7 days, and I think that's the beauty of having those different category indexes. So overall, a lot of bad news is already priced in. Yeah, so over 12,000 tokens are down 99% in general. But what you see here is that the rally we've witnessed for the last 2 days, you don't see that in Bitcoin. Yeah, so Bitcoin is down minus 2% over the last 7 days. Here it's since yesterday. That's a template of as of yesterday. So you see minus 5%, but the overall direction is the same. So Bitcoin is down, and when you look at the other indexes, the strongest outperformer at the moment is DeFi, with over 25%, and the metaverse and gaming tokens. So two sectors which were beaten down a lot. And keep in mind, DeFi is already in a bear market for over 400 days. So you see that the market is a little bifurcated. They're buying stable coins on the one side, and on the other hand, they play those altcoin news again. For example, Uniswap is the massive outperformer recently. It had an acquisition of an NFT platform. It generates more fees than Ethereum at the moment. And it appears that investors are continuing to chase the news again, driving up riskier asset prices, so to say.
You know, you mentioned that some of the things involving DeFi. Of course, UST was a major player, and you had mentioned the Terra Luna collapse. UST was used in a lot of, we're seeing a decline in leverage, as I mentioned at the start of the show. So what does that ultimately mean for the crypto market as these algorithmic stablecoins have imploded, particularly UST imploded? Do you think that, first of all, that phase of the crypto market structure is done, that people have given up on this model? Number two, if that's the case, what does that mean for leverage and overall for the stablecoin market?
Well, I think overall, I welcome the crypto winter. It's a cleansing process which was necessary for the market. You mentioned the other algorithmic stablecoins, and I think those are not so important when it comes to the market share of the overall stablecoin market. What you're seeing is that people make a difference between the stablecoin model. So a lot of investors are flocking to USDC as, I would say, the most solid stablecoin, still followed by Tether in terms of flows. But I think it's still a relatively important part in the overall crypto market. So we need those stablecoin as a means of de-risking, and also as a very important building block in the DeFi market. So I would say that I don't know if algorithmic stablecoins are dead. I think it's too early to say that. Maybe we see a new version, a new model. Time will tell. But at the moment, investors are focused on this fiat collateralized stablecoins such as USDC, which makes sense. Yeah.
I'm just looking at some of your notes, and you note that you have a chart on Bitcoin dominance and how it relates to potential catalyst for a potential rise up, a turnaround.
Yeah, so normally everybody is watching at the Bitcoin dominance. So that's the market share or the market capitalization of Bitcoin in relation to the total market cap. So normally what you have in a bear market is that people go to the least risky asset, which is Bitcoin. But what you see here is that the Bitcoin dominance is not really coming up. And in the last few days, as I've mentioned, people sold what they can and not what they wanted. So the blue chips, Bitcoin, have lost massively, also Ethereum. And so the old narrative that in our bear markets, the Bitcoin dominance just will rise. So for example, in the last cycle, we had Bitcoin dominance rising to 60% again. And I'm not sure if we are seeing that. And maybe one headline confirming that thesis is the world's largest spot Bitcoin exchange traded fund, for example, the Purpose Bitcoin ETF, lost half of its assets under management last Friday, which may have triggered Bitcoin's crash over the weekend. And the outflows meant that the fund had to sell around $500 million in Bitcoin, which added to the selling pressure in an already shaky cryptocurrency market. So for me, my personal target was always 60% for indicating a cycle low and maybe an altcoin rally. I'm not so sure anymore if this will happen.
So, Martin, who are the winners here? I mean, looking long term, you see some potential in some of these smart contract platforms as gaining market share when relative to at least market cap. So, which ones in that group are you thinking will outperform or at least do quite well in the next few months?
So I think what's interesting to say is watch the most beaten up sectors. So for example, DeFi and the media entertainment sector. At the end of the day, it's all about the valuation. And I can imagine that if Bitcoin is rising again, if maybe the macro environment is more clear and we see inflation coming down, that those beaten up sectors will rally the most, as we could expect in such a market. I like the smart contract platforms overall because they really have a strong TAM. You don't have to bet on a specific niche, as all the digital applications are on top of the base layers, and they will pay their transactions in a fee of the native base layer chain. So I think for investors, it's a more safe bet on growing ecosystem. So I like both. I like a barbell approach. So for example, smart contracts as the basis investment, and to play a short-term rally, for example, in the metaverse, media entertainment, and the DeFi sector.
Any names? Any specific names? Any specific names in it?
Oh, any specific names? I couldn't hear you. Sorry. The line was broken. No, and I'm not a specific name picker here, so I'm a more macro oriented. As I said, what's really interesting is that the decentralized exchanges are coming back, and especially Uniswap. That's eye-catching in the last few days, that no matter what happens in the market, people are buying Uniswap. And I think they are speculating that they will maybe turn on their fee switch so that those token holders maybe will get a share of the revenue stream they earn. As I've mentioned, it's outstanding that they are currently earning more fees than the whole Ethereum chain. So $4 million in fees over the last 7 days versus, I think, $3.9 million for the Ethereum chain. And that's eye-catching.